Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And I think no matter our level of experience with options, we can relate to the sort of anxiety that can come with pushing those buttons for the very first time to place our orders. We're afraid we're going to make a mistake. Well, today we're going to try to relieve that pressure. We're going to be walking through step by step how to place entry orders and exit orders for calls and for puts, how to place options trade orders on Thinkorswim as a topic. So should be a good discussion. I'm going to keep it at fairly high introductory level. So hopefully everybody can follow. Before we get to that, though, let me first of all say hello to everybody who's already chatting in. Great to see so many familiar names as always out there in YouTube. Hello there, Richard and Kevin, David and Eva, Scott, Sharon, Life in the Fast Lane, Chris, Robert, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, we'll enjoy the presentation. It's always nice to watch those recordings. It's a great way to watch these webcasts. But if you'd like to be here for the live discussion, this is a Wednesday webcast series. We kick things off promptly at 2 Eastern time each Wednesday. You're certainly invited to join us. We'd love to have you here as live stream audience members. Now, I also want to let you know there are different ways to connect with your favorite Schwab presenters when the camera is not on. So, for example, if you have an account on X, you should be following your favorite presenters there. It's a great place to connect with us. If you reply to one of my posts on X, I try to reply right back to you. You can find me on X at Cameron May CS. You can also find me on LinkedIn. So just look for Cameron May, look for the guy sitting on a bench in front of a big Scottish castle. You found the right guy there. But yeah, just like with X, if you follow me there, if you reply to my posts, I'll reply right back to you. Great place to connect. All right, and by the way, that one's pretty much new. I just started doing that maybe a week and a half ago. But let's get into this discussion of placing orders on Thinkorswim for the trading of options. And as we do, of course, we need to consider the risks associated with what we're demonstrating today. All corporate and issuer names and market data shown are for illustrative purposes only and not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as a sole means of investment research. There's no guarantee that the execution of a stop order will be at or near the stop price. And any investment decision you make in your self-directed account is solely your responsibility. Now, before we go to the platform, start learning about placing orders, I also want to point out that my very good friend Connie Hill is going to be hanging out in the chats with our live stream audience members. She's going to be addressing any questions that I can't get to that may pop into that chat window. Connie and I have now been working together for years and years and years and years and years and on and on. Connie brings a lot of experience to this discussion. So thanks for having my back there, Connie. And you can follow Connie on X at Connie Hill CS. All right. But what are we doing today? Well, we're just going to be walking through entry orders for calls and puts, exit orders for calls and puts, putting in combination orders of both, just trying to break the ice, remove that intimidation factor for those that are new to placing options trades. It can be intimidating, doesn't need to be. All right, and of course, we're going to be doing all of this on Thinkorswim on the paper money platform. So no real money at risk. Great place to get acquainted with new processes like this. So let's go right to the Thinkorswim desktop trading software platform. And we find ourselves here. Now, if you're not familiar with Thinkorswim Desktop, by the way, this is software that can be downloaded from within your Schwab Online account. You just go to the Trade tab and look for Thinkorswim. Click on that. Click on the big blue button. It'll walk you through the download process. But it doesn't cost anything to download Thinkorswim. And this is a whole suite of complementary tools to what's available already on Schwab.com that might assist in breaking apart potential investment candidates and placing those trades, managing existing accounts. But also there is a paper money or a practice version of Thinkorswim. So if we're just clicking those orders for the very first time, maybe practice in paper money first, then move over to live trading if we intend to do that. Lois says, not sure how to find you on LinkedIn. So you can just look for Cameron May on LinkedIn. I've also pinned a link. Let me go to my X profile, if you're following me here on X, you'll see right pinned to the top of my feed is a link right to my LinkedIn account. All right, so you can do that. But let's get right into trading options. Now, it's not a solicitation to trade options. It's just a demonstration of how it's done. So when we go to place a trade on Thinkorswim, kind of intuitively, we're going to go right up to the trade tab. And for today's demonstrations, I'm just going to be using Walmart. I'm doing that for a couple of reasons. Number one, it's among the largest companies in the world out there, and for some traders, having a nice liquid stock is a high priority when trading options. Also, it's just barely into the triple digits. It makes the numbers easier to follow along with. So when we go to the trade tab, we type in our symbol here. What we'll notice down below, we have our quote information for the stock, if we want to trade the stock, which was last week's discussion, or we could trade options using what's known as the option chain. So the option chain is basically an advertising bulletin. This is the way that I think about it, like an old-fashioned bulletin board, all right? But this is where we can see the available contracts that a trader might choose to get into, or we can also use this for the exiting of existing contracts, but contracts extending anywhere from 2-day contracts. This is we're making this webcast as of the 29th of October. So we can get into contracts that expire as soon as the 31st of October of 2025, or as far out as the 21st of January of 2028. Now that's on Walmart. These dates can change from one stock to the next, from one set of options to the next. But each one of these will connect us to the ability to place trades. Now, one other thing I want to note here in the option chain, it'll say 100, and sometimes it'll say weekly. So 100 here just indicates that these are what we call standard contracts. They represent the potential exchange of 100 shares of stock, and the ones that expire anytime other than the third Friday of the month, those would be the sort of traditional options expirations. They'll be designated as weeklies. So you'll see those highlighted also in purple here. All right, so let's go down, and how about for today's demonstration, let's just choose the expiration. I'm not going into why we're choosing. Why is a much different question than how. Today we're focusing on how, okay? So let's just go to the 21st of November of 2025, the 23-day contracts. I'm going to click on the little caret or little arrow right next to the date, and that shows us some of the options that are available for that expiration. If we want to see all of them, we can come right up here where it says strikes, and notice that's set to just show 12. So 12 in the money, 12 out of the money contracts. I could change that to just all. Let's do that. Then we can scroll on down. We can see all of these available strikes. They're prices at which we might agree to strike a deal to potentially exchange shares of stock with another trader. How about let's just say that our trader here would like to buy a call option. Whole process here so far is to type in our symbol, pick an expiration, and then we're going to go down to the ask price for the contract we're interested in buying. And with the stock trading right around 103 right now, how about we go to that 103 strike as a demonstration? And if I click on that, that actually creates a potentially complete buy order. So this platform is very much designed for speed of execution for our traders who might be very sensitive about entering orders quickly. Just by clicking on that price, it brings up a buy order. And because I selected the 103 for the 21st of November, notice as we go through this order bar, most of the details are already automatically populated here. So this is in order to just trade a single not a single contract, but a single leg. Sometimes we can get into credits, or we can get into spreads, or you've probably heard of things like iron condors and fancier stuff like that. Those are more than one leg of contracts. This is a single contract we're buying, and by default, a quantity of 10. Now, each contract here, again, represents 100 shares. So that would be 1,000 shares that this may be giving us conceptually the right to buy. Well, maybe the trader wants 1,000 shares or they want 10 contracts. But this is customizable. We can just change the number here. We can delete what's in there and replace it with the number of contracts we prefer. Another thing that we might do, here's what I'm going to do for the rest of today's discussion. Let's set this to default not to 10 contracts, but to 1 contract from here forward. That can be done right up here in the general settings for the platform. So I'm going to click on the little gear icon, go to the application settings, and go to the order defaults. And if I move to options, this will allow me to change the default quantity from 10 contracts to just 1 contract. So let's click apply. And from now on, when we for the rest of this demonstration, and really after I shut thinkorswim down, open it up again tomorrow, it'll just always default to just 1 contract until I go back and change that quantity. All right, so let's just go for 1 here. Off to the right here, the position effect. This is to either to open a new position or to close. Most of the time, we'll probably just leave it on auto. Vic says, I was about to say to change the default. Yep, we can do that, Vic. Symbol of Walmart. The expiration is the 21st of November because we clicked on the 21st of November. Strike price is 103. We chose the calls on the left. The puts are over here on the right. Now we can set a type of order. And we've discussed types of orders before, but I do want to cover this just quickly again. When placing an order to buy a call option, we have some ways that we might control that entry. First of all, we could submit what's called a market order, which just means, hey, I want the 103 call. I'll pay whatever it takes, whatever the market is requesting right now, that's what I'm willing to spend. Obviously, that can increase the likelihood of a quick fill, but it also means that we don't have any control over the price that's ultimately paid. Now, another thing that we could do is choose a limit order. And a limit order implies that the trader can set a maximum for how much they're willing to spend. So it looks like right now we're trading between maybe, probably 340 and 350. Trader could even say, you know what, I'd even go up to 360. That's going to be my limit though. A limit order just means fill at this price or better. In the case of a buy order, better is at a lower price. If we put in 360, it doesn't mean that we have to pay 360. It's just setting that as the maximum. All right, now a final type of order is a stop order. Yes, sometimes traders will use a stop to enter either a stock or an option. Now, in this case, a stop means I want to pay if the price rises up to a certain point. So maybe our trader is waiting for the value of this call to strengthen. Maybe if it goes up to $4 per share as an example. We might put in a stop order. That means, hey, stop the bus. I want to get on this ride right now. It's going in the right direction. Buy stops, probably not as common as market orders and as limit orders, but I did want to quickly show those. So let's switch this back. How about for today? I'm going to switch this to, now let's go with the limit order. Let's leave that at our 360. Now, just off to the right of that, we can select our TIF, our time in force. Oh, and look at that. We have a survey. I'll get to that in just a moment. So our time in force means, well, we can submit this order to get filled today or cancel it, or we can choose GTC, good till canceled. If we select that, that means, well, if I can get it for 360 or less today, that's great. If I can get it for 360, if I have to wait till tomorrow or the next day, maybe it never fills, but really that condition would just wait until that order is filled or until I cancel it or until the 21st of November goes by. These contracts don't trade anymore. All right, but yeah, let's just set this for a day order. Now, we just walked through all of this, and it seems like quite a lot. No, it's actually really not a lot. I'm going to just do this all again from scratch. I want to buy a call, go to the trade tab, type in my symbol, go to my expiration, click on the ask price, make any customizations. You know what? Let's just make this a 360. And this is actually ready to go. So let's click confirm and send. And we haven't committed to this trade just yet. This hasn't been sent to the market just yet. Instead, we get what's called the order confirmation dialog box, which gives us one last opportunity to read through and make sure this is really what we want to do. And in this case, I think a good healthy practice is to read it out loud to oneself so that we make sure that we're not making any mistakes here. Okay, so I'm going to buy one. Yep, I wanted one. Walmart, 21st of November, 2025, 103 call at a 360 limit, and this is to open a new position. Yep, okay. Now this tells us how much we can make on this trade. Long calls have infinite reward potential, how much we can lose theoretically. It will also show us any commissions that are to be paid. And down below, it'll have any reminders that might be important. The following order is expected to place the account, into a concentrated position with PNR. Okay, so this one is, let me reroute this. This, I don't want to get too far into what that's telling us. It's just going to throw people off. How about we just throw this into, it doesn't matter. Anyway, don't worry about this too much. It's unique to this demonstration account and its situation, but always make a habit of reading this little red bar down here. I wasn't going to send this trade off anyway, so let's not. Anyway, so that's it. So really actually a pretty quick process. Click on the ask price, make any customizations, click confirm and send, and read it out loud for ourselves. All right, so I'm going to delete that order. And as we move to the second order type, and actually that's the one that it's going to take me the longest to explain, because from here on out, a lot of this stuff we're already going to know and not going to necessarily need to repeat. I do want to point out that we do have a survey for those that are here in the live demonstration. If you do me this favor, click on that survey link right now. It'll populate the survey, and then you can fill it out after we're done. Give me some honest feedback. Here are just a couple of notes to make about the survey. Number one, it's a really short survey, 2 multiple choice questions, and it could be done right there. But there's also a comments box and a suggestion box. Just know that if you take the time to fill out the survey to whatever extent, I take the time to read through that data. I read through your comments, and it definitely helps. All right, so thanks for doing that for me. So we've just learned how to buy a call. Well, let's learn how to buy a put. And really, it's basically the same process. We go to our trade tab, we type in our symbol, we choose our expiration, except in this side, we're going to go to the right side, which is where the puts live. Then we choose our strike. In this case, still trading around 103. Let's just go with the at the money strike. And to buy, we click on the ask price again. The way that I keep that straight, bid price or ask price. Well, if we want to buy something, you typically go up to the owner and you say, well, how much are you asking for that? And then you pay their asking price, unless you want to haggle a little bit. If you want to sell something, you say, hey, I have this thing for sale. How much will somebody bid for it? And we sell to the highest bidder. So bid price and ask price. So I'm going to click on the ask price, and that creates a complete buy order. And notice that quantity default now. So John says, well, what's the best way to see the options trades graphical analysis before placing the trade? It's a good question, John. That's way too deep in the weeds for what I wanted to cover today, and to be way off track. It's a legitimate question, just wouldn't contribute, I think, to the linear progression of this discussion. So I do have a suggestion for you, because I do get into a lot of that. If you are new to options trading, here's a suggestion I have for you. Number one, welcome to the channel. Great to have you here. If you haven't subscribed to the channel yet, make sure you do that right now. Go down and click on the subscribe button. That doesn't cost anything. It only takes a moment. But our YouTube channel is where we house our live streams, but you can also find playlists of previous webcasts. So our YouTube channel full title is Trader Talks Schwab Coaching Webcasts. Click on playlists. And for example, for those that are new to options, I would scroll right down to the bottom. My webcast series, Getting Started with Thinkorswim, is all the way down here at the bottom. Actually, I wanted to show you, not just Getting Started with Thinkorswim. Let's go to my Getting Started with Options, because that was what the question was. You can go to View Full Playlist here. And what I would suggest for you is look for lessons. Look for, I have a series of lessons. These have gotten buried so far down there. They are. But you can just scroll on down and you'll find 10 lessons about trading options, just starting with the basics and building up. Now, there's a similar set of lessons for those that are just new to Thinkorswim. Except there are 8 lessons. If I go to my View Full Playlist, and I scroll down a little bit. This one, you don't have to scroll down very far. There's lesson 1, 2, 3, 4, 5. Just get acquainted with the platform. Okay. So, John, I think that'll be helpful for you. But in any case, back to our purchasing of a put, we click on the ask price, and then we just need to customize our order bar here. Buying one contract. We'll leave it to auto for opening or closing the position. The Walmart 21st of November 103 put, we could put in a limit. We could put in, let's say, a market order. Make it set the time in force, good for the day or good till canceled. Market orders, we have to submit that as a day order. But any case, let's click confirm and send. And again, we get this pop-up important reminder down here at the bottom. It's going to be specific to this example account that I'm using. Not too concerned about that, but do make a point to read these. We're putting in an order to buy one Walmart 21st of November 2025 103 put at the market price. It's not a commission on this demonstrated position, but there can be on some. Here's the maximum profit for the trade. There's the maximum loss for the trade. And then we can just click send. And at that point is when we get essentially committed to the trade. But here, I'm just going to delete this. All right. Interesting. Eva says we got that Fed rate cut. I think that most people were anticipating 25 basis points. Very good. Thank you, Eva. So that's it for buying calls, for buying puts. What about selling calls and selling puts? Well, it's just a reversal. Well, it's not a reversal. It's just that instead of clicking on the ask price to create buy orders, we click on the bid price to create sell orders. So for example, if I wanted to sell a call, I could click on the bid price. Now, if we were selling a call, sometimes the trader is selling a call to initiate a new position. Other times they're selling a call to close out an existing position. Yes, sometimes, believe it or not, selling opens a trade. But in this case, let's just say that if we want to close out a position, we don't have to designate this as being specific to the existing position. Just place the order in the account where the original position exists, and it'll match it up and close it out. Okay. But in any case, we're putting in a single leg order to sell, and it will say -1. That's an indication that we're selling. Somebody asked me recently, what do you mean selling a negative contract? That just is a visual representation of the idea that we are selling. Okay, 21st of November, 103 call, and we can set limit orders, stop orders, and market orders here. Market order has the same implication. We're trying to sell, we'll accept whatever the market is offering at the time. If we switch this to a limit order and we put in a price, here we're saying, I want this price or better. With limit orders of both types, buy or sell, we're saying I want this price or better. So when we're buying, better is at a lower price. When we're selling, better is at a higher price. So here we would be saying we're accepting a minimum of 330, totally fine selling at 335 or 340 or 350. That's just our limit for how low we will go. Then we can choose our time in force, good for the day or good till canceled. How about with this limit order? Let's select good till canceled, and I'm going to click confirm and send. I'm getting the same warning down here. We're just going to ignore this for the rest of the demonstration. But I do think it's a very good habit to read these red notices down at the bottom. Make sure that we're okay with the order that we're about to place. In any case, selling the one Walmart 21st of November 103 call with a 330 limit. This is to open because we don't have a long call at that strike. Or did I click on call? Yeah, oh yeah, that's right. Yep, I got a little bit twisted up there for just a moment, but we are demonstrating how to close a call or how to sell a call. In any case, yep, selling that 103 call, limit price of 330. If I do sell this, collect a premium, minimum of 330, there is infinite risk potential on a naked short call position. That's an interesting observation, and make sure that we note not a commission on this example trade, and then we're ready to send that off. So once you know the process, it gets to be pretty quick. Same deal for puts. how do you think we would place a put? Try to get 2 seconds ahead of me here mentally. It's your job now to try to walk through how's Cameron going to place this order to sell a put. I'm going to go to the put side. I'm going to go to the bid price for the strike price that I'm interested in selling and click on that. That creates that sell order. Selling one contract. It has the correct expiration. It has the correct strike price. It's on the correct side. I can choose limit, market, or stop. Now, in the case of a stop order, if we were to, let's choose a stop in this case. I'll reiterate this in just a moment. But when placing a stop order, this is to stop the bleeding on a position, try to get out as the price is falling, but it's not a guarantee. A stop order is not a guarantee that we'll get an execution at a specific price. We can make this good for the day or good till canceled, and then click confirm and send. So that would be if we're placing a sell order from the trade tab. But I want to talk about using combinations of these types of orders. Let's suppose that we were looking at buying a call and the trader already had in mind how much they were willing to risk of that initial investment. So with that 103 call, right now trading between 330 and 350, let's say we can maybe get that filled for 340. I'm going to put in an order to try to buy that call for $3.40 or less, and then we'll just hope that it goes up in price. But if it doesn't, if the price starts to fall, maybe the trader wants to put in a stop order, a sell order to stop the bleeding. Let's say if it falls by half. Now, not everybody puts it at half, but I just want to show how to put an order in once we have the concept of what we want the order to look like. So here's how we might do that. Let's come to our ask price. And actually, this could be done from the bid or the ask. To me, it just feels, I guess, more comfortable to do it from the ask. I'm going to right click on that 103 strike and put in a custom buy order with a stop attached. Okay, so what this does is it brings up two orders, one to get us into the trade and the other one to get us out of the trade if it's misbehaving. So let's put in an order to buy one contract, same strike, same expiration that we've been considering. Let's say that we're willing to spend up to $3.40. That's our limit. But if the price of our contract, instead of rising nicely and getting us into potential profit territory, let's say that it starts to fall. Trader wants to draw a line in the sand where they prefer to just be done with the trade. Well, if we're spending $3.40 and we want to stop the bleeding if we fall below half of that value, half of $3.40 is $1.70. So I'm going to enter a stop here at $1.70. And I'm going to make sure that that's good till canceled, so this exit order doesn't just expire at the end of the trading session, at the end of the trading day. So that's it. This is known as a first trigger sequential order or a custom buy order with a stop, however you want to phrase it. It basically allows us to put in that buy order and also to have that stop attached on the same order ticket. And the stop going into effect is contingent upon actually getting the original order filled. So if our buy order doesn't fill, the sell order never goes into effect. If we're able to buy the share of the contract for $3.40, then this stop would go into effect, good till canceled. And if the price ever fell down to or below $1.70, it kicks off a market order and we sell for whatever we can get at that point. Okay, user says, can you please show buying 50 shares of a stock, then selling 25 at one price, the remaining 25 another price? So we're not doing stock trading yet. However, we did that last time. So here would be my suggestion there. Go to the channel, go to the playlist for this webcast series. Right down there at the bottom, getting started with Thinkorswim. And right there, it was actually a couple of, it wasn't last week, it was the webcast before, 7 essential types of orders for trading stocks with examples. Okay. All right. So this would be how to place, I'm going to take a quick peek over here and just not lean out over my skis here too much. Oh yeah, well, let's do it right there on that Apple call. That'll work. Okay. But back to our trade tab. So this is how we might put in a buy order and a sell order at the same time. But I frequently get the question, well, how do I add a sell order to an existing position? Well, we could just put it in through the processes that I've shown you today. Here's another way that we might do this. Let me just delete this one that we've queued up. If we're on our monitor tab and we're looking at an existing position, so for example, I have one call here at the 272.5 strike for the 21st of November for Apple. Well, that costs 320. What if I wanted to put a stop half of that value, 310? I'm going to right click on that Apple call and create a closing order from there to sell that call. Not looking to sell it right away, but to instead sell at maybe a stop price of, what did I say, 310? I think that's right. I can just make that a good till canceled order. So it's right click, create closing order, choose the call that we're closing, and then we can enter the order from here. So that an advantage to doing it from the monitor tab is that it makes sure that we're always trading the intended quantity of contracts. You know, if we had 3 contracts and we just place a sell order from the trade tab, it's easy to forget to change the quantity to match the quantity that we actually own. If we do it from the monitor tab, it just sort of checks that for us. Okay. But I could click confirm and send here. Not going to do that. I did want to show one other type of order. So it's not exactly what user YL3GZ2XU7X said or asked about, but let's say that we want to buy an option, and then we want to have 2 sell orders. One, yes, to hopefully help us manage the downside of the trade, but the other one to hopefully manage the upside, to take the profits if they happen to manifest. So that's actually known as a one cancels other order. And here's how that might be done. So here we are on the 21st of November. Let's go back to, this is Apple. Let's go back to Walmart. 103 strike that we've been talking about. I'm going to right click on the ask price and put in a custom buy order with what's known as an OCO bracket, meaning we're going to be putting in 2 sell orders, but we only want one to ever fill. One is going to cancel the other if it fills. If we can make a profit, we'll cancel the loss order. If we take a loss, we'll cancel the profit order. Okay, so let's change that to with OCO bracket, and you'll notice this now creates 1 entry order and 2 exit orders, one of which is a stop, that's to manage the downside, one of which is a limit, which is to potentially manage the upside. So let's say we're going again to try to fill this. We're trying to buy for 340. Let's set that as a limit order. Then let's say maybe our trader is hoping to double their investment. I don't know. Let's just put in a value here. If we can buy for 340 and sell for 380, we'd be doubling our investment here. I'm going to make sure that limit order is good till cancel. Remember, the limit order is saying sell at this price or better or higher. But at the same time, we have a stop order. If we're buying at 340, let's say that we're willing to risk half. Let's try to draw a line in the sand at 170 and make that our stop order, good till canceled. So this does allow us to place 3 orders all bundled up onto 1 order ticket. Get us in. If we're in, then put 2 orders into effect. One to sell profits, the other one to sell and take losses. Now with the stop order, this is not a guarantee that 170 is exactly what we're going to get. If the stock happens to just be collapsing in value and the value of the call gaps down to, let's say, $1.50, that could trigger our order. This is an order to sell at 170 or lower. We might wind up selling lower. Okay. But finally, once again, healthy habit. Getting ready to sell this. There's a quick reminder here down here. I'm going to read that, but we're putting in an order to buy 1 Walmart 21st of November 2025 103 call for $3.40 or better. And then we're going to sell if we get that filled, either at 680 or above, or sell at 170 or below. right? And then it has that OCO designation. If one of these fills, the other one is canceled. One cancels the other. No commission on this trade, but there can be on some types of trades. And there's a different disclosure down here due to potentially wide markets or liquidity risks at the time of activation of the stop order in this case. This order may be manually substituted with a limit order upon activation and worked until filled. Okay, so I could send that off. I'm not going to do that. These were all just for demonstration purposes only. John says, I still don't know what standard is. Does that mean market? Essentially, John, if a trader is particular about exactly what triggers a limit or a stop order, they can make a specific designation, like do that based on the ask price, or do that based on the market price, or just go with the standard. Okay. Anyway, but guys, that is what I wanted to walk through today. Number of different ways to place entry and exit orders on calls and on puts. If this is your first exposure to placing options trades, it's generally not a bad idea to do it on paper money first. If we ever intend to move on to real money, we can work out the kinks, at least in the processes for placing those orders, before going and placing real money at risk. All right. But I hope you enjoyed that discussion. It was an important one. We'll continue with other tools and resources available on Thinkorswim next week. But I want to give you a heads up that I have other webcasts all throughout the week on a range of topics. You're certainly invited to join me there. But I want to give you additional invitations. Number one, make sure that you're following Connie and me on social media. You can follow Connie and me on X. It's a great place to connect with your favorite presenters there on X. Let me show you that here on my, here we are. In any case, you can find Connie on X at Connie Hill CS. You can find me on X at Cameron May CS. And if you reply to one of my posts, I try to reply right back to you. And what you'll also notice right here at the top of my feed on X, because not everybody has an X account, or maybe you just prefer different social media, or actually you can follow me on both, but you now have the ability to follow me on LinkedIn. So there's a link right there to my LinkedIn profile, or you can just look up Cameron May on LinkedIn. But this is what that profile looks like. Big advantage that I'm discovering in my very early days of use of LinkedIn is I can get into deeper detail on my posts. I think that's what I'm going to be doing. So today was just a discussion, not a recommendation, but we're talking about what's going on with NVIDIA giving $1 billion to Nokia. What are they trying to accomplish with that? What are the potential implications for those companies? Yesterday, we talked about Amazon's layoffs. Yep, that one seemed to be a popular topic. In any case, give me a follow here. You'll be in a small group, just 87 there. That's, I think, one of my 17,000 followers on X. In any case, yeah, give us a follow. It's the best place to connect with us in between these live streams. There is a survey out there now for our live stream audience. So if you haven't done it yet, just click on that survey link that Connie's been kind enough to repost on a couple of occasions now. Give me some honest feedback, and I will read through that data. I read through those comments. It's always helpful. Thank you for doing that. Everybody, I will see you in a future webcast. I'll also look for you on X, and now I will also look for you on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.